Well, Wall Street shares sank yesterday as China announced retaliatory tariffs. The U.S. stock market suffered its worst day since the start of 2019, with the Dow Jones Industrial Average falling by 2.38%. The sell-off came after China announced it will impose new tariffs on $60 billion worth of U.S. imports from the 1st of June. Several investors have been surprised by Beijing's response.
These trade wars, to a certain extent, when you look at the big trade deficit we have with China, there's probably some reason we need to try to correct and improve that from a long-term perspective. Obviously, the near term and even the medium term can be painful when we try to adjust our economy to a better outcome. And so I think when these things hit the headlines, we definitely see a lot of volatility. And then all the bears come out of the woodwork and start talking about all the things they were talking about in the fourth quarter. So we see definitely some sentiment shifting away from the market, and that's why we see a pretty negative reaction here last week and also today.
And among the stocks particularly vulnerable to U.S.-China tariffs, Boeing slid 4.9% and Caterpillar fell 4.6%. Meanwhile, Apple shares sank 5.8% on the double whammy of heightened trade tensions and an unfavorable court decision. The sell-off was also sparked by fears that the world's two largest economies are spiraling into a no-holds-barred dispute that could derail the global economy.